Today has been an absolute bloodbath for the overall S&P 500, and of course we had a red day for Tesla stock. But if you're someone who's looking at Tesla from a longer time horizon and not just looking at Tesla from a day-to-day perspective, today we actually got some good news. Now this is simply because we got today the announcement that both Honda and GM are scraping their $5 billion plan to co-develop cheaper EVs. And so if you guys don't know, just a year ago, both Honda and GM joined forces together, like they're somewhat of like the Mario Bros, like Mario and Luigi, trying to defeat the big bad evil Tesla. And so a year ago, they said that they were going to be sharing manufacturing secrets as well as sharing technology. This way they could go ahead and boost each other up to go ahead and fight Tesla. However, today we got the bad news that those plans are falling apart, and this comes after GM today said that it was scrubbing its self-imposed target to build 400,000 electric vehicles by mid-2024, which was a target that they just recently set a couple of months ago earlier this year. But here's the thing, guys, we have to put things into perspective, and this is one of the reasons why on this channel I put a huge emphasis on paying attention to the macroeconomic environment. See, what we know is that it's very challenging to go ahead and buy a new car, as Elon Musk recently said in his recent earnings report, saying that, hey, it's going to be hell. In fact, it almost sounded like Elon Musk was crying as he said that he was getting PTSD from 2009. And so what we have to understand in this context is that a lot of these legacy automakers trying to enter into the EV space are actually still not profitable on their EV vehicles. And so this means that they only make a profit on their internal combustion engines. And so if you're entering into a cyclical period of the economy where right now people are not buying vehicles and you're unprofitable on your electric vehicles, well, that means that you kind of have to stifle those plans on focusing on electric vehicles. And it's not a bad thing. If I was the CEO for any of the legacy automakers, I would do the same thing. I would say, hey, we have to pause on these electric vehicles. I hate to do it, but we need to make money and we have to stay profitable.
Down here we need money, you know?
But it's not just the fact that these automakers are not profitable on their electric vehicles or the fact that we're entering into a bad cycle of the economy. It's also the fact that what we're seeing with these strikes. For example, we're seeing the big three automakers still suffer from the UAW strike. In fact, today we see the chief financial officer, Paul Jacobson, said that the strike was costing GM about $200 million per week.
Damn!
And so essentially what this means is that yes, Tesla is going through a hard time, and most likely as we move into 2024, in the first half of 2024, as I've been saying for a while within the Push and Profit private group, but also publicly on this channel, that things are not going to be looking good. So it's going to be a challenging time for Tesla, but it's going to be even a more challenging time for these legacy automakers trying to transition into the EV space, which means that the market share that Tesla's going to have on EVs is most likely going to remain dominant, as these legacy automakers are having to kind of stifle on their plans and really just put a pause on everything. Now, if you don't believe me, check out this article right over here that Porsche, or some people like to pronounce Porsche, is now joining Tesla and warning about high rates, with the CEO saying that governments increase interest rates heavily, and that creates a situation where customers are quite reluctant to invest in a new product. And so the CFO of Porsche, or Porsche, saying this is pretty much just like what Elon Musk said last week. In fact, he said, if interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply can't afford it. I mean, it's quite obvious to understand the economic situation that we're in. You know, I've been saying this for a while. In fact, if you guys have been within the Push and Profit private group or just publicly watching my videos for quite some time, I said, hey, 2023, we're most likely in the beginning going to see a little bit of a bounce coming off of the horrendous market that we got in 2022. But going into the second half of 2023 at the rate that we're doing, especially with these rate hikes, it's not going to be good for the economy. And also, it takes time for these hikes to really take into effect into the economy. And so that's why today we had the Central Bank of Canada actually pause rates. They're still trying to assess the situation because they know that if they continue to hike, well, it could literally break something in the financial markets. And that's when you have a true ongoing recession. Right now, we're technically not in a textbook definition of a recession, although, that definition was altered a bit last year. And also right now we are having somewhat of a robust labor market holding everything together. But if something breaks because of rates continue hiking, well, that's not going to be good for all the automakers. But at least it still keeps Tesla way further ahead of their competition. But with that said, I want us to go ahead and hop into my laptop. This way we could go ahead and take a look at Tesla from a different perspective, cover a few data points on what's currently going on. But before we hop into my laptop, make sure to check out the links in both the description of this video or also in the pinned comment section below, because there's going to be a link for my free weekly market pulse insights, where every single week I send out an email talking about what's going on in the overall environment and what we have to pay attention to as a stock market participant, whether you're trading Tesla or investing in Tesla or any other stocks, because again, everything is interconnected. And like I said, it's completely free, so there's no reason why you shouldn't sign up for my weekly market pulse insights. But like I said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and it's not hard to tell that today was a bit of a red day for Tesla. We pushed up in the beginning of today's trading session, but pretty much started falling down for the remainder of the day. And we see that in the after hours currently, Tesla is still falling downwards, pretty much giving back the gains that we had yesterday. For example, we pushed up about 2% from the day prior to yesterday. And now if we look at it, let's actually map it out from yesterday's close to roughly the close of today, about 1.8%. So yeah, pretty much giving back the gains that we had from here to yesterday's close. So definitely something that we're seeing with Tesla, a bit of a red day. Overall markets, if we take a look at the S&P 500, definitely closed much lower, and I'll circle back to this. But I want to take a look at Tesla stock from a daily time frame and highlight that, we're still at a critical area, as one of the things I mentioned is that if you're looking at it with the volume profile on the chart, we see that there's little volume relative to price. And so essentially, if there's a lot of selling pressure, it could push down the order books, as there's not a lot of exchanging around these price levels. And if there's a lot of buying, it could push up the order books. But while many believe that this was the area for Tesla to bounce up, I mentioned in yesterday's video that this is not an area that I personally was not looking into buying more for my long-term account. In fact, I'll play a mini clip from yesterday, especially with the news that we got today. And we see that, yeah, Tesla stock did close. It looked like it pushed up higher, but then it ended up only doing 2%. And so we're seeing some rejection around here, which is kind of just aligning with my concerns of this is not necessarily the area where I want to add into my long-term portfolio. Again, now, of course, I'm not going to play the entirety of yesterday's video, but just kind of showing you guys that, I'm not trying to be the I told you so type of guy. That's not the type of guy I am, because there is going to be a time where I'm wrong. But I just wanted to highlight that, because yesterday when I mentioned that although Tesla stock did push up 2%, I mentioned that this was not an area that I personally wanted to buy. And for some reason, I mean, it is what it is. When you're on YouTube, you're going to get pushback. I got DMs and emails of people saying you're ridiculous. Tesla bounced up at exactly these levels last time. And that's why I want to remind us that, technical analysis, it's great, but it's just one data point. Right? I don't pay attention to what's going on only on the charts. I put much more weight on economic data, catalyst events, seeing where money is actually flowing, where hedge funds and institutions are pouring their money, alternative data. I put much more weight on a lot of other data, because as you can see, technical analysis, some individuals could see something completely different. The people who were sending me emails and DMing me were saying, hey, but this is the area where Tesla bounced up, and so this is a support, and so of course Tesla's going to bounce up from here. And that's, it's unfortunate that a lot of individuals, they only know how to do technical analysis, and they kind of just have also a misconception with technical analysis, where they believe that, just because this could be a support, that Tesla can't break below it. And that's false, right? Technical analysis isn't used to predict the market. It's used to measure the markets. And that's something that is just completely used wrong all the time. For example, this descending trend line that we see for Tesla doesn't mean that Tesla can't break above it, that Tesla's never going to break above it. It's just measuring that every time Tesla has reached this trend line that's descending, it has gotten rejected. But eventually, if things look good for Tesla, it can break above that level. These supports, these resistances, or whatever squiggly lines you draw on your chart, these stocks, they don't have to adhere to that. I want to provide that friendly reminder that stocks don't have to adhere to any squiggly lines you draw, and it's really based on the fundamentals. Are people buying or already selling, right? And it's also based on the business. You have to remember, we're not just trading candles, we're trading businesses. And so that's why we have to understand what's going on with the business and what are things that could impact the business, like economic data. And so, again, I'm not trying to be the I told you so guy. It's just I do get a lot of pushback every time I'm bearish on Tesla. And I want to provide a friendly reminder. I am long-term bullish on Tesla. I've been bullish on Tesla since 2017. It's just right now, I'm not. I don't plan on buying more for Tesla. One of the areas I've been highlighting is, around this 180 level. Does it mean that Tesla is going to absolutely touch it? No, I could be completely wrong. And this is why you should never trade or invest based on anyone else's opinion, not mine, not anyone else on YouTube, not any fund manager, no one on X. Only trade and invest in what you see value. I was right about my idea that this is not the area that I wanted to buy in for Tesla, but I could be wrong. Maybe tomorrow there's some data that comes out that Elon Musk can make a tweet and something drastically can change. And that's why I say you want to stay data dependent, right? Can't just look at technical analysis in right, or in isolation. You have to use it in confluence with multiple data points. And so what are some things that we want to pay attention to now that we're talking about the data points? Well, one of the things I want us to take a look at is primarily what's happening tomorrow, which is that we're seeing the GDP numbers come out at 8:30. Obviously I don't have a crystal ball. I don't know what's going to come out. The consensus is that it's going to increase and things are not going to be horrible. And so I want to go ahead and paint that picture. So we could still see the GDP report come out strong, but that doesn't necessarily mean that we could avoid a recession in 2024 in the first half. In fact, like I said, things take time. And so for now, things can look somewhat okay. But going forward, I'm still concerned about the economy. But definitely this report is going to have a huge influence on the day for the market, as well as earnings. For example, one of the things I mentioned recently to the Push and Profit Private Group is that we have 41% of all the companies in the S&P 500 announcing their earnings, and that's going to have a huge influence. For example, today I let the Push and Profit Private Group know about IBM's earnings and Meta. IBM, they exceeded their estimates as far as revenue, and Meta also beat their revenue, so that was good news just seeing that. But let's actually take a look at Meta. Let's see how it's doing, because of course there's a lot of nuance with earnings. It's not just did they beat their earnings, but we see it. Meta did push up. I'm not sure if the earnings call already started, but I'll probably read the transcript. So this is actually IBM. Sorry, this is Meta. Meta is pushing up. Sorry, I didn't mean to confuse you guys there. But yeah, so the data that we're seeing tomorrow, GDP numbers, and I just want to show you guys a chart of where we are at currently with how GDP, the growth rate, has been looking. And right now it looks like things are kind of curling downwards. We see that during the pandemic things looked bad. Then we had a lot of quantitative easing. Things just drastically pushed up. This is, back in 2021, everyone thought they were a stock market genius. You could throw a dart. A monkey could throw a dart and everything went up, right? And now is where things are getting challenging, which is why I said you want to be a bit more selective. So yeah, being a little bit more selective right now, things I'm not too I'm not too bullish on Tesla right now, but in the future, I am still bullish on Tesla unless things change. But what caused some selling pressure for today? Why did we see Tesla push down? Why did we see the overall S&P 500, index ETF push down? And in fact, let's push up SPX, which is the S&P 500 index. We saw that we broke down a major level of 4,214, and that's not a good sign. This is definitely not a good sign. So what did we see for today? Well, if we actually take a look at the 10-year Treasury, one of the concerns is that we saw yields pushed upwards. And again, as I've been saying, and I know it sounds repetitive for those who are in the Push and Profit program, or those who may, see some of my videos on YouTube, like, oh my God, this guy is talking about the 10-year Treasury. Look, this has a huge influence on the direction of the markets. Of course, there's this risk equity premium where if the 10-year Treasury is high, well, it takes away the appetite to invest in stocks. And so we're seeing this push upwards, and anything above 5% is going to be something that's going to be concerning for the markets. We see above 5%, then stocks are going to sell off. That's just the nature of it. That's what we're most likely going to be seeing, which is why I say we want to have this pulled up and we want to pay attention to what's going on in the bond market right now. Is there's not a lot of demand for bonds. You guys have to understand that there's this inverse relationship with bonds, where if people where bond prices go down, yields go up. And so right now, Bank of China, or the Central Bank of China, is not buying our debt. We have Bank of Japan no longer really buying that much of our debt, and that's concerning because we know that the government is spending a tremendous amount of money. And what do they need to do? Well, they have to issue out treasuries this way that they could fund what they could fund or raise capital for the money that they're spending. But if no one's buying that, well, what do they have to do? Well, yields have to go up to make it more attractive for investors to buy these bonds and hold them. But if those yields go up, well, then why would you invest in the stock market? Why would you hold capital in here? And so that's a big concern over here. Now, going into Tesla, look, we got some green candles. Fingers crossed. Maybe tomorrow we get a positive GDP number, right? Something else for tomorrow, or not tomorrow, the later on this week, I've been saying it pretty much all week, is PCE, last inflationary gauge that we get before the Federal Reserve makes their decision on monetary policy. Now, today we had the Central Bank of Canada, as I mentioned earlier in this video, pause. And so it's more likely that our central bank is going to pause as well. I'm not too concerned on that. I've been saying it way before, since the beginning, that I expect them to pause again. As it wouldn't make sense for them to hike, especially the way things are looking. I'd be very surprised, but of course, we have to move accordingly. So we'll have to see what ends up happening November 1st. But we saw the percentage of the future markets pricing in a hike go from like 30% to nearly zero as we get closer to November 1st. And it's something I've been saying for a while. It just does not make sense for the Federal Reserve to hike right now. They still have to assess the data. So we'll continue to see, again, low volume relative to price for Tesla. So perhaps if we get that positive GDP number, we could see a little bit of a bounce. But again, it's not something that I'm going to be looking into for buying into my long-term portfolio. Just not yet. Honestly, right now I'm just being a little bit more selective, a little bit more cautious, and you guys should only do or invest in what you guys see value in, as I said. But when Tesla does break above this shelf right over here, where there's a lot of volume, that's going to be the area I want to watch, because then we get closer to this area where we have this descending trend line. And once we break above this descending trend line, then I'm all, just super bullish for Tesla. But right now, a bit concerned, a bit worried. We'll have to see what goes on with this Cybertruck delivery event taking place at the end of November as well. We want to keep our eyes out for that. But you guys let me know in the comment section below. What are your thoughts on Tesla in the short term and the long term? Doesn't matter if you're investing or trading. Just let me know what are your thoughts. I'm always interested. And before you guys go, make sure to watch this next video right over here. And I'll see you guys on that next video. Take care, guys.